learning goals in this workshop is for us to understand the classes of intangibles and how to account for them. To begin with, what is an intangible asset? They are non-monetary assets without physical substance. So there are monetary assets like accounts receivable without physical substance, but they are not intangibles. Intangibles have been specially carved out as an asset category which is of non-monetary but without physical substance. Examples of them are brands, assets, goodwill, copyrights, trademarks. There are two classes of intangibles. There are some intangibles that we can identify, some intangibles that we can't identify. We can also classify intangibles as those being generated within the organization, which is called internally generated intangibles. They are unidentifiable intangibles, and those being purchased from outside, and those intangibles are identifiable. One of the key concepts in determining whether an intangible is identifiable or not is asking the question, is this intangible separable from the business and be sold to someone else, to a third party? Separability is an important criteria, and it goes with identifiability, because an intangible should be identifiable to become separable for it, and it has to be separable to become identifiable. So purchase intangibles are separable and identifiable. Because they're separable and identifiable, those costs incurred in purchasing such intangibles are shown as assets. On the other hand, internally generated intangibles are not separable from the business, not separately identifiable from the business. And as a result, those costs incurred in developing internally generated intangibles are shown as an expense. Let's compare tangible assets with intangible assets. The model that we can use for tangible assets is a cost model or evaluation model. For intangibles, we generally use the cost model, because to use the revaluation model, intangibles should have an active market. Most intangibles do not have an active market. So by default, intangibles use the cost model. Useful life. Tangible assets have limited useful life, except for land, which has an indefinite useful life. intangible assets can have a limited life or indefinite life. For example, a brand such as Coca-Cola are considered having indefinite life. Tangible assets, the residual value is either 0 or more. But for intangible assets, normally considered as 0 because most intangibles do not have an active market. Tangible assets can be amortized if they have a limited life. Intangible assets, if they have a limited life, they are amortized to a maximum of 20 years. Tangible assets could be impaired if those assets have an active market. But for intangible assets, this is not possible because most intangibles don't have an active market. Reversing impairment expenses in later years is allowed under tangible assets, but that is not allowed under intangible assets. A point of difference. When tangible and intangible assets are acquired, they are shown as assets. When an intangible asset is internally generated, they are shown as assets. But for intangibles, they are shown as expenses. Those costs are shown as expenses. Acquiring an identifiable internally generated intangible can be shown as an asset. Although internally generated intangibles are not shown as an asset, when they are acquired by another part, that part can show it as an asset. When another party acquires unidentifiable internally generated intangibles as a collection, that is called goodwill, it can be shown as an asset, as goodwill for the collection of intangibles. Revaluation is allowed under tangible assets if the revaluation model is used, and under intangible assets it is allowed only if an active market exists for that intangible asset.